Oh, hi everyone. Um, Sorry, I'll start again. I was looking at something else and trying to speak at the same time, which is probably not a good idea. Hello, everyone, and welcome to this afternoon's session where we will be looking at what the markets are doing, in particular the stock market. Obviously, I think we've got some indices as well today, but essentially we're going to be looking at stocks. What do you need to look for if you are thinking of trading them? Although the lessons that the signals that we look for on the stock charts are equally valid for investing. I mean, trading, if you want to know the difference between the trading and investing, I think it's just time. As a trader, you're not going to hold on to a stock. You don't particularly see it as an asset. You simply see it as a vehicle for turning it over and making some money. Of course, if you're an investor, you have a completely different mindset. But the way we're going to look at the markets, the way we look at stocks and the markets generally, those of you who know us and who come along regularly will know that we were looking at it through the prism of volume price analysis. But as always, before we can start, I must draw your attention to the disclaimer, which I know you can see on your screen. As you know, trading can be a very risky business. So please don't ever think of using money that you cannot afford to lose. And just to follow up on what I was saying previously, volume price analysis, what is it? It's a method, a way, an approach of looking at a chart and looking at the price action, looking at the volume, and basically putting it together to judge whether what you are seeing on that chart is actually, is it a genuine price move or not, or is it an anomaly? There's a bit more to it than that, but that's the fundamental concept of volume price analysis. We've expanded that. It also includes support and resistance. We use candles and we use candle patterns, and we use time in the sense of multiple time frames, but we also use volume over time, and we'll explain that when we look at the charts more closely. This is the book that's on Amazon, explains it in more detail, and there is a companion book which has examples of the sort of signals, the sort of setups that we want to see with VPA. This companion book has over 200 worked examples of stocks, some indices and some commodities, and it's in all time frames. It's a sort of methodology and the sort of approach that once you've really got a handle on it and you recognize as I said, these setups, these candle patterns, these signals, if you like, it just gives you so much more confidence, and then you can, you're trading, you're investing, you'll be much more relaxed, and you can, you'll be more successful apart from anything else. Right, there we are. What have we got? This is how we've broken it down in the sense that, as I said, there's 5 elements. These are the 2, volume and price. We use candles and candle patterns. I know other people use bars, but it's just what we've settled on. It's what we started with over 20 years ago, so we've stuck with it. And support and resistance. I cannot stress too highly, you really have to understand, first of all, concepts of support and resistance, but also how are you going to display it? How are you going to measure it on your chart? How are you going to mark on the chart those areas that are price-based support and resistance? And we also use volume-based support and resistance. So you kind of put them all together, as I said, in multiple time frames. And then on top of that, you can add your indicators. You can use your moving averages, you can use your Elliott wave, you can use your Bollinger Bands, Gann, MACD, whatever. It's entirely up to you. In fact, talking about Gann, I had a very interesting email from someone, and he was writing in response to a post that we had done on my site, annacooling.com. It was about crude oil. We've been writing about oil. We trade crude oil on and off, and we certainly know the commodity very, very well. And this crude oil is at a very critical point, and perhaps if David, perhaps he wouldn't mind, he will look at the crude oil chart, the daily chart, the weekly chart for the WTI contract in more detail. It's got to a point and there's a lot of resistance ahead. It can't seem to get any further. We've been saying this for weeks, basically. But it's interesting that he contacted me, because in his email he was talking about the squares. He was talking about and I think he was really referring to Gann's square of 9, and he said it was quite coincidental that he had actually got to that same level, and the analysis that I had used based on a price action and volume and the support and resistance indicators that we have developed actually tied in very, very nicely with his approach as well, which was using Gann. So that's what I'm saying. Once you understand, these basic concepts, you can then add in whatever really takes your fancy. Really, it's whatever completes the picture for you. That's the technical picture. Now, of course, that's only one aspect of your trading or investing. You then have to really look beyond whatever market that you are or instrument that you are trading or thinking of investing, because obviously a chart doesn't move in isolation. There are other drivers for that chart, and at the narrative at the moment, excuse me, is the bond market. You cannot escape it. It's bond market, inflation, yields rising has caused a divergence between the main indices, primarily between the Dow and the Nasdaq. The Nasdaq represents growth. It represents tech stocks. Tech stocks do much better when the economy is moving forward. Interest rates are low, which they have been. Interest rates have not really been on the horizon. Well, I can't think since the financial crisis, because the central banks have suppressed them. You have high interest rates, you're going to have a big problem. But as soon as the bond market has woken up, in particular the bond yields on the 10-year Treasury, then it's markets are very nervous. They're quite schizophrenic at the moment. And the best way I can describe it is if you look at the daily chart of the Nasdaq. Now, I've got a sort of an equivalent Nasdaq here. This is on the MT4 platform, because the nice thing about platforms such as MT4, MT5, and obviously TradingView, it allows you access to these markets, which previously you would have had to, you could only trade them through a proper futures broker. Even stocks that you can trade on TradingView, can't you, David? And we have stocks on the MetaTrader platform as well. But I mentioned the daily chart, and there's a reason for bringing up the daily chart, because those of you who've been coming along regularly will know that obviously if you are going to be day trading or holding things for a very short period of time, you have to somehow put together a portfolio, a selection of stocks that you're going to look at on a short-term basis and say, well, is there going to be a potential setup in what I am looking for? And this is what VPA this is how it can help you. But in particular, what the daily chart can tell you is it can kind of point the way into what you can expect in terms of the trading environment. So there's two things I want to say about this particular chart. First of all, I want to just very, very quickly give you it's just such a beautiful example of volume price analysis. And this is the US this is the US 100, so it's based on the Nasdaq, as we can see here. And this is where we are at the moment. This is what I said about the schizophrenic, market environment at the moment. And by that I mean you have an up day. It had been a down day, but then a ton of buying came in under that candle, sort of driving back up again. And then you would have thought, with all that buying coming in under there, it would carry on further. No, bang, it went down the next day. This was yesterday, this was Monday, this is yesterday, bang, straight back up again. Now, one of the reasons it went up yesterday is overnight, very, very late, there was a bond auction. It was only the 3-year, but it was very, very well. The bid to cover ratio was very good. The central bank wasn't held, the Fed wasn't left with a lot of bonds that nobody wanted. That really put some fuel into the market, and up it shot. Now today, it's gone up. That's about the only day we've had a bit of a follow through. Now, we've had a follow through because we've had the CPI come in. This is again, we're talking about inflation. And very, very quickly, if I just bring up the Forex Factory. Right, we had these two releases earlier on. We had the CPI, which actually came in on target, but this is the one which seems to have got the market terribly excited. It's very, very slightly lower. This is core CPI. So, you know, the narrative is, yeah, bond yields are going up because they're worried about inflation. Commodity prices are going up. We've got this huge stimulus package that is going to come from the federal, from the government in the States. So if you like, the market is saying, well, you know, you've got all the conditions for rampant inflation, which is really not very good for stocks, because if you think about it, you know, inflation affects us and how things become more expensive. What if you're running a company, things become more expensive, your bottom line, etc. I don't have to give you a an inflation 101 on that. The problem with the narrative, it's not very straightforward at the moment. Central banks believe they can allow it to run hot, as they say. All the central banks have had this 2% target for inflation. They say it's the kind of sweet spot for inflation. They're happy with it. It's like Goldilocks, you know, not too hot, not too cold. Well, you know, inflation can be a bit like a tiger. You want to try and control it by catching its tail, and it can turn around and, you know, take your arm off, basically. So that's where we are. That's the kind of narrative we have at the moment. Now, what it also tells us that as traders is we have to look beyond the market that we are trading. Now, I know those of you who are some of you with us today are already on our Forex program. Our Forex program is not just teaching you how to analyze a chart, how to trade using VPA. It includes all those other things that we think you need to know, the fundamental news, but also the related markets, because these markets are all interconnected. What happens in one market has sometimes a direct impact of what happens in another. And the related market that is center stage at the moment is very much the bond market. Now, this afternoon, just in case you haven't looked at your economic calendar and you are, you know, going to be dipping your toe into stocks, is talking about bond auctions. This is the key one, the 10-year bond auction, which is actually at 6 o'clock our time. And tomorrow there is a 30-year bond auction. Now, until very recently, no one paid the slightest bit of notice, of what the bond auctions, you know, whether, you know, what was going on with the bond auction. Now they are center stage, and as a result, we have to factor that into things we need to know, not just on a daily basis, but on a global basis. But to get back to this daily chart, another thing I wanted to say is, and we can see this in individual stocks as well, that, as I said, the daily chart, it gives you and sort of the kind of, as I said, the trading environment that potentially you could expect on the faster time frames. And this is really nice with the Nasdaq, because yeah, it has been, as I said, a bit schizophrenic, but it's been really big ranging days. Not like if we look at this bit here when it was creeping higher. Can you see the spread of these candles against the spread of these candles? Well, would you rather be trading up here, or would you rather be trading in here? I would suspect, if I answer my own question, I would suspect it would be in this one. As I said, but expect more volatility. I haven't had on this chart, we haven't had a trigger of the volatility candle, which is this one, which tells us that price action is actually outside of the average true range for this time frame. But it still tells us that, you know, there is something, the market is moving. There's some, you know, there's momentum in there. There's participation, and that's what we want. Now, moving back to this area of price action here, and looking at the volume profile underneath this price action, if you can recall, this was coming up to an all-time high. Whenever markets are approaching new all-time highs, they all get very, very nervous, and they climb the wall of worry. And this is where you would have read in the media, oh my goodness, can it go any higher? Can it go? And well, it can go high. You know, markets, you know, they can go where they go. how we judge whether it is simply going to carry on high at the point it is possibly going to reverse lower is we look at the volume. This is being driven higher, spreads are narrowing, which is, they're compressing. They're compressing all the time. The volume is being driven in, but then it starts to fall away. And Wyckoff's VPA is premised on Wyckoff's 3 laws, and one of the laws says it's effort and result. If you have a lot of effort and there's no, there's a lot of volume going in and you don't have a result, well, that's an anomaly. Now, in this case, you have it going up, but look, there's the fuel, if you like, that needs it to be taken higher is actually falling, and we do get the point at which it rolls, and we have a bearish, candle patterns, a bearish engulfing candle, which is this one. If you overlay that on that one, you have a small shooting star. Then we have what we want to see. We want to see an agreement between price action. So the price action starts to go down, and look, the volume starts to rise. That's what we want to see. We want the exact opposite, the mirror image. It's the exact, not mirror image, it's the exact opposite of what we saw while it was going. That was anomalous. This is not anomalous. And then we had this sort of sell-off in the Nasdaq, in the tech sector. You'll hear things like rotating out of tech. Tesla fell heavily. All the kind of darlings of the tech sector, they started to sell off quite heavily because of inflation. This narrative of inflation, bond yields. They're looking for, we've talked about it before, value stocks, etc., etc. We had, then it continued to fall. We did have an attempt to rise here. We can see there's a lot of volume going under there, and we had a big tail to the bottom of that candle. And and I think there's a tail. My chart isn't brilliant here. We also had some buying under this candle. We had buying under that candle, and yet this day was actually another down day. And you say, well, if that volume is going up, it did push it higher. This is where you have to place this price action. I haven't got my support and resistance levels on here, but it could be that it reached a key resistance, and in fact it did. This is a price-based resistance that we see here, goes across there. So you have the volume and price, but you read it together with, as I said, the support and resistance levels. Then we had what do we have? Then we had an effort to rise again. It actually took it back to the volume point of control. This is where we have support and resistance through the prism of volume. The VPOC is the fulcrum of this market. It's where there is a kind of an agreement. It's the volume transacted over time, and it did actually act as a bit of support, and it's higher. But if we look at the volume under, it was really, it was quite a big bar, but not a lot of volume, and then down it went. And we actually think when we wrote about it, we said, yeah, it's probably heading back to the VPOC, and so it has done. And then we, as I said, we have this kind of, up, down day because of the narrative in the wider market. So that's what I wanted to show you on the daily chart for the Nasdaq. Now, getting back to today, the volatility that has come in has been as a direct result of the CPI, because the CPI, the core CPI, has actually come in very, very slightly below expectation. That's got the market all terribly excited, and up it went. And this is my 5 chart configuration for the Nasdaq equivalent, but I use this for my currency pairs as well. And by using a Renko chart, which is a non-time based chart, it's based on the number of points. I think each one is 4 points. I can then tie it in with what is happening on the time chart. And again, it's looking at support and resistance levels on the hourly. I've got the 15, and let's have a look here We had a bit of congestion. It's quite, you know, it's been quite volatile today, but this is where the news came in. Market really liked it. Huge volatility candle, immediate retrace into within the spread of the candle, and up it went again. Now, I spoke earlier in our Forex webinar about how you use Renko charts together with time charts, and for entries and exit. For entries, it's fairly straightforward, and it's the same on the Ninja version, where we look for an agreement between the colors on the trend dot that we see here with the trend monitor. And we've got a bit of congestion here, so once it clears this level here, then that is a really, you know, potentially a nice entry. And what happens with Renko, as you can see here, it absorbs all the noise of the market. It just holds it. So even if you get some volatility on the volatility triggers on the time chart, it will hold you in. Now, exit slightly, you can. This is where the time chart can come in. So this is going, it actually went up really, really fast, as we can see here. This is nothing to do with time. It's once a certain number of points and pips have gone through, one of these little bricks is formed. But when you then move to a time chart, and so this is the move, and you have here, which is a classic candle of weakness, which is a shooting star candle. And you will find that possibly on the Renko, it's about this point here, but it hasn't quite rolled over. You can say, right, that's been a nice move, that's it, I'm out, and that's it. So that's how you can use the Renko, both for an entry, and when you put it together with a time chart, you can also then look at it for exits and actually use the candle patterns and what you see on the time chart, particularly if it has been a really nice move. Getting back to levels, what's interesting, which is very interesting, is in fact it's come off the R3. This is price-based support and resistance based on the Camarilla. We've got some other bits and pieces in there in the algorithm on here, and you can almost, you know, bet your house on that is when it gets to the third level, either the resistance or support, it's going to pause. Don't ask me, it's just the third level and the fourth level are the ones to watch. And in fact, it came off straight off the R, and these levels on the hourly are there for the whole week, whereas on the time frames below the hour, they are refreshed every day. So that's the Nasdaq, my equivalent of the Nasdaq on MT4. Very quickly, right, what have I been looking at in terms of stocks? What I've done, I did say a couple of weeks ago that I've been looking there's the biggest challenge we have when you're looking for stocks to day trade is finding them, because there are so many of them. And what criteria do you use? It's like asking how long is a bit of string. And I did say a couple of weeks ago that I've been looking at some filtering software, and I have been looking at various packages. And I thought I was going to go with one particular one, but I haven't. It's a long time since I've used it, and I've decided to not to use it now. So I'm a little bit behind on looking at what to not recommend, but it just suggests, as it were. But one, I have this dear old bar chart, which used to be the way they presented the data was challenging sometimes, but they really have. I've been looking at it a little bit more closely, and I think I'm probably going to go with this one, and particularly on sectors. As I said, we've looked at in previous webinars, we've looked at most shorted stocks, because most shorted stocks you're going to get a short squeeze. GameStop is the one that comes immediately to mind. Although interestingly, GameStop once that volatility has died down, it actually, if you look at the chart, it's behaving in a much more normal way, as it were. So gone to bar chart, and what I've actually looked at is used volume. I've looked at volume leaders. Now these are stocks where there's been a lot of activity. We just know there's been a lot of volume driven into them, and it's just been really interesting to see what that effect has had on the chart, basically, and to see whether there is an opportunity for a trade, or at least to put the stock into a watch list. Because the other thing you have to be aware of is that these signals, they happen all the time, but sometimes they take time to develop. And you do have to have a little bit of patience. But if you know what you're looking at, then it's great. You've got a selection, you've got your watch list. You will also take the opportunity to learn more about the stock, in the sense that, well, what sector is it in? Is it a well-performing stock in that sector, or is it a bit of a laggard? Is the sector doing well? And then you have to place the sector into the economic cycle, into the business cycle. And the economic cycle at the moment is, well, we have the inflation narrative. Well, which stocks are going to do well if inflation is in fact going to go higher? So you have to build a whole narrative around. It's almost like a top down that you have to start. You have to start from the 64,000 feet view of the economy and what's going on in the related markets, what's driving the narrative, and then you gradually come down and you end up with this with this list of stocks that are potentially going to do something on the day that you want to trade. Now, I've got a couple of things. I'm going to pass over to David in a second, but I've got Viacom here. Viacom is really interesting for a couple of reasons. First of all, we talked about this the last time, where we look at a specific pattern where we have a stock that's been in congestion for a long time. You have this kind of saucer shape, and we have this here, and this is one that is really a nice pattern to look for. And it doesn't do anything. It's actually at the volume point of control. It's just moving sideways. There's volume going in on both the up bars and the down bars. There's a very strong platform of support that we have here. This is the Ninja Trader price based support and resistance. And the great thing about this one is you can see here, this line is thicker than this support and resistance, this support line here, and that's because it's been tested, so it's much stronger. So that tells you, not only do I have the volume point of control, but below it I have a really strong platform of support. What support and resistance does, it also helps you with your placing your stop losses. So there we are. So we have this moving sideways. Then we have a bit of volatility coming in. We've got volume coming in. Not massive, but it's enough to push it up and push it up. And then we had another bit of volatility, and that pushed it up. Whatever happens with volatility, the price action will almost always retrace into the spread of the range of that candle, of the volatility candle, and then it will either reverse or it will congest. Now we had three little candles under here, very compressed candles, low volume, high volume, low volume, but really they're all kind of anomalous. So that was going up. Possibly volatility is used also to shake people out of the market, because you're not the only one. I'm not the only one looking at this pattern. I know what this pattern can do. I know the potential of this pattern. The stock was about $30 odd at that time. Everyone else is looking at it. So you want to shake people out of the market? This is what you do. So people will take their profit, or maybe somebody who got in here will say, yeah, that's fine, I'm happy with that. Shake out some more people, and then up it goes. And then you have the volatility seems to be amplified, as we can see here. It goes up, it goes down. This is the one which is really interesting, which is this one here, and you think, oh my goodness. So if you didn't, if you'd held on and you got to here and you saw this and you saw that, you think, you know what, I'm out of here. I'm very happy with this. But really, if you look at the next candle, into the spread of the candle, but look at the volume underneath it. I mean, it's a big down candle. There's buying comes in underneath it. It's a volatility candle, but the volume is not fantastic. And then this is the key one. Look at the volume under that, it's falling away. So what does that tell you? It tells you this is probably going to go higher, and then you get a little bit of congestion, that low holds, and then up and up it goes. And that's what you want to see. You want to see little soldiers going up, reasonable volume underneath it. Those spreads, that volume, there's nothing really to get frightened of. There's nothing anomalous about them. Then up they go. And I know we have another little pullback here, and then we had the final. And this is the candle, which is interesting. We had another big volatility candle, which has pushed it up to $85. What is the first thing that's happened? We've had a retrace within the spread of the candle. Now, going back to being a day trader, well, there'd be plenty of trading opportunities in there if this was in your budget, as it were, as a trader. Yesterday we had a down day, pretty much expected, given that we had the volatility trigger. And now today, well, it's all good news. So that's a really nice sort of a move higher. And this is what you're looking for all the time. You're looking at, this is the daily chart, but this price action would be replicated on any time frame, on a 5-minute chart, a 3-minute chart, an hourly chart. Is whatever time frame that you want to trade, that this will be replicated. And if you want to recognize these quickly, then the book of worked examples is the one to look at. Now, the other one I saw on there was another volume going back to the bar chart, was NEO. NEO is really interesting as well. So this is the daily. We had a ton of buying coming in under this candle here. And it's also off the S3. So we have our important levels at the same time. We've actually had a gap up on it, but it's gone straight into the volume point of control. But it was sparked by bar chart, because obviously there was unusual volume going into NEO. And the other one, dear old GE, which I think David is going to speak about a little bit. Look at again, looking at the range of the candles for GE. There's been a gap down open for them, but on a day trading basis, not a hugely expensive stock, not very volatile. I know we had a little bit of volatility here, but volatility can be, you can make it work for you, and sometimes it's best you think, what, I really, let's put it aside. Let's find a stock that it's got steady price action, it's in a trend, it's moving, it's not moving sideways, sideways moving stocks like Viacom were when they were in that consolidation. I'll keep them on my watch list, and then when they're ready to break out, and they will break out with volume, which brings me right back to bar chart, or the equivalent you have, or sometimes you can use stock beep, which I also have highlighted before, and you can see where is the money going to? Where is the money flowing into? Is it flowing into safe? In currencies, we have safe haven currencies and we have risk currencies. It's the money flow, and stocks do you have defensive stocks, or do you have growth stocks and more aggressive stocks? It's where the money is flowing, and you want to be following that money. Right, that's what I've got to say there. Just one final thing I want to say about this one here. We talk about related markets, and the students on our program, we look at, although they're trading Forex, we look at all the other markets. We look at commodities, we look at stocks, and we look at equities for this view of what is the sentiment. If you are on the other side of the fence and you are looking to trade stocks, then you really need to look at the currencies as well, and you need to look at whether the Forex is moving into risk currencies such as the Aussie and the Kiwi, and you will certainly look at the US dollar. Generally speaking, the US dollar, if markets are going up, you will find the US dollar being sold, and vice versa. This is the dollar index that is available on this particular platform. We put the daily chart up for the US dollar, the dollar index, and in fact I wrote about it on my Forex page. It's been going higher. I did also mention this morning, and I'll mention it again, there is a relationship between the dollar and politics in as much that in democratic, when the Democrats have been in control of the government, the dollar has tended to rise. Well, it's certainly been rising, certainly on the fears of bond yields, and it is a safe haven currency as well. It went up yesterday, complete reversal. R3, third level, it hadn't even got there, and I said, right, it's going to get to the R3, it's going to pause. Didn't quite expect the reversal that it has put in, but then the Nasdaq shot up, and it's actually created, if you overlay that candle on that one, you've got a shooting star, and down it goes again. So if it carries on lower, where's it going to go? It's probably going to go back to the S3, which is here, but a lot will depend on what is going in the bond market, which will then also drive what is happening in the equity market.
Hi everybody, I hope you can see my screen and hear me okay. Just check with Anna. Hello, hello, hello. Brilliant. Okay. Just move that out of the way, move the chat box down. Lots going on, lots of nice moves, and as Anna says, all interrelated. And yeah, the sentiment is, as you can see, just start with the three indices. We've got the YM, the NQ, and the ES here. Top line is on 5 minute, bottom line is on the daily. And as you can see, since the open, they've all been pretty positive.
Are they all going up today?
They are indeed all going up today. That's the YM. That is the NQ. And over onto the ES. There we are. Fun enough, the ES is actually, the ES and the YM are, the NQ is a little bit, it's in congestion at the moment. Perhaps not so bullish as the other two. If you look at the bottom on the daily, you can see what's going on. This is the YM, pretty good performance so far. Same on the ES over here. The NQ is a little bit more muted, but then it's got, there has been this disconnect, which we've seen a lot over the last few years. We've seen days where the NQ has been strongly performing and the other two have not, and vice versa over the last few weeks, to be honest, where we've seen the NQ selling off quite strongly, and yet the YM and indeed the ES have gone up quite strongly. So it's not always the case that they will act in concert together. Generally speaking, of course, because they are a related market, they are a risk market, you would expect them to be, but it's not always a straight line relationship, and that's certainly been the case over the last few months. So that's where we are at the moment, just seeing what's going on. We're at, as I say, you can see we're at the VPOC on, certainly on the YM. Usual surge in volume, which came in a little bit after the open here. Volatility candle, we've gone through there, we're up to the VPOC now, and it's a question of waiting and for either for the congestion to break, wait for the congestion to come, which is what we expect to see. We're seeing it on the NQ. The ES has actually broken away from it, but we'll see if it comes back to that or not, or continues on higher. So that's where we are in terms of indices. Let's just have a look at them on the multiple time frame. I think I've got the YM here. Yeah, this is on the YM. Got the 15-second here, 1 minute, 3 minute, 5 minute, 10 minute, and 15 minute. 15-second I love, it's one of my favorite time frames for scalping on. But the rules of VPA apply whatever time frame you're using. It really makes absolutely no difference. The indicators work in the same way. Got the trend monitor on here. You can see the trend monitor is blue, 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 blue. So it's a full house basically. And of course, what you will see is you will see transitional colors coming in here on your fastest time frame. This is on 15-second. And if it is going to change in trend, then obviously they will ripple through onto the slower time frames. No change on 1 minute yet. Wouldn't expect it maybe, but it will come through in the next few bars if that does indeed develop further. For the time being, we're just sitting there waiting, and up at the volume point of control on 3. Up at the volume control on 5 and also on 10. So there's lots of congestion on there. If I just pull this over for a moment, this is, where are we? Just go onto the other screen, just pull up the chart. This is the dollar. Oh, sorry, that's the one I wanted, there we go. Anna was talking about, you know, what's going on in the Forex world. Well, what has been going on, pretty obvious. We've had strong selling of the dollar. We've had strong selling of the yen, and we had strong selling of the Swiss franc this morning. That is starting to come to an end, while the yen is continuing on. The commodity currency has been rising very strongly. CAD's on its own because we've had, I'm not sure the interest decisions come through yet, but there was an interest decision there. But the New Zealand and the Aussie obviously been rising very strongly. They're coming off. This is the New Zealand dollar. You can see it on here. So that's basically what's going on there. In terms of the dollar, this is basically it across the time horizons. This is 1 minute, 3 minute, 5 minute, and on the day. This was the 2-bar reversal, which is signaling weakness. Obviously, on an intraday basis, you're going to see all sorts of price action going on, but longer term, you know, perhaps you're going to see a sell-off in the dollar based on that 2-bar reversal there, which you overlay one candle on the other. What are you going to have? You're going to have a shooting star. So that's where we are with the dollar. That's where we are with currencies in terms of risk. It's still got that bullish momentum to it. If it's going to go anywhere, if you want my opinion, it's going to break to the upside. So it's just a question of waiting and seeing, setting your levels, waiting for that market to break if it is indeed going to break that way for you. What I've got over on TradeStation, just very quickly, this is the NQ. This again is on TradeStation 9.5. This is being driven by the Interactive Brokers account attached to it. So I can trade straight through this account if I want to, straight off the chart. This is the NQ. I've got the NQ on, just pull that over a little bit, there we go. I've got the NQ on multiple time frames. So I've got it 1, 2, 3, 4, 5, 10, 15, 20, right the way through to the dailies and the weeklies. Again, it gives you, as I explained on the currency futures this morning, it gives you this wonderful perspective. Down the bottom here, I've got, this is the order flow. This is time and sales, basically. So this is live orders that are going through the market. These are transacted orders. These are not spoofed. This is not a ladder. This is actual executed orders flowing through. What I'm looking for is basically big numbers, not interested in the 1s and 2s and 10s and what have you. What I'm looking for, 30, 40, 50, and 100 and upwards, and how the market then reacts to those sorts of levels. The color changes or the color representations highlight whether it's below the bid, at the bid, above the ask, between the bid and the ask, and you can pick it up very quickly. But in terms of what this tells you up here, this is the radar screen. Basically, I've got the trend monitor again on here, and I've got the trends as well, the trend dots, and I've got the volatility over here. It's just squeezed over a little bit tight. I can just pull this over a bit. Just pull that, there we go. Okay, there we go. So we've got the quantum volatility indicator on here as well. So I can go to any of these time frames and pull up what is going on in terms of volatility. So if I want to go to a 15-minute chart, pulls it up over here, tells me where the volatility is. It was, where was it? 3 bars ago, 4 bars ago, 4 bars ago on that one. It's this one here. So as soon as you see these coming in, you know instantly, without even looking at the chart, what's going on. You expect to see, as Anna said, either congestion or a full-blown reversal coming off those particular triggers. That's why the volatility indicator is so important, and that's why it's so powerful using it on radar screen, because you have this visual window right the way across the whole time frames. And what you're also seeing now in terms of the development of sentiment is when you look at the trend monitor here and the color of it, if there are going to be changes, it starts up here at the top and it goes right the way down through the ladder, obviously down through the slower time frames. And the same is true of the trends as well. So again, it's just a great visual way of looking at multiple charts. You can have 400 of these running with all the different time frames. You can have 400 instruments, 400 different charts running on radar screen. It's immensely powerful. That's on the 9.5, that's with interactive. On version 10 with TradeStation Securities, you can have up to 1,000. So it's massively powerful. And once you get your search criteria for your stocks, it is a fantastic way of being able to sort through them very quickly, go and pick off trades very quickly, whatever the markets are. Let's just drop that out the way again, go back onto Ninja. Here we are, back on our time frame, trying to push higher. We have that little phase of, if you remember, we have that little sort of interrupting phase here on the trend monitor. Now it's come out the other side into blue, still bullish. We went through this low volume area here pretty quickly and on up into a higher area where we're building some volume. Let's just drop that out of the way. Let's move over to see what's going on in terms of slightly slower time frames, 1 minute, 3 minute, down onto the 5. You know, it's still telling you the same message. The same message is that, you know, we are looking at a bullish move. Dollar's just coming off a little bit. I haven't got the VIX up. Just have a quick look at the VIX in a moment. just go on to the, where are we? Stocks, here we go. There we go. I had GE up, as Anna mentioned. We have a soft spot for GE. For many different reasons. We know them extremely well, both as a company and also as a trading entity. So we've seen them from inside and out, so we know them very well. But again, it really doesn't matter what you're trading. This is GE, and I've got it on 1 minute, 2 minute, 3 minute, 5 minute, 10 minute, 15, 60 minute, and out to the daily over here. And the principles are exactly the same. You've got the trend monitor here, which is telling you it's pretty bearish at the moment across the faster time frames. Let's go down onto a little bit slower. This is on 10 minute. This was the open. This was the pre-market with the stocks. You've obviously got the pre-market to deal with. You know, what is happening? Obviously, the volume in the pre-market is that much lower. Then we get into the cash markets coming in. We get volatility. We've got a huge volatility bar, lots of volume under there. What are we expecting? Well, at the very least, some sort of congestion, possibly some sort of reversal off there, which is what we're starting to see. And that's why, you know, when you're trading a faster time frame, you may be up on this time frame. Yes, we've got a volatility trigger on here as well. We had one here. We've got one here now in the reverse, so it's coming up the other way. We've got the volume point of control below. But in terms of what is going on globally, if you like, in terms of a slower time frame, that's why these other time frames are so important. They're telling you you've got volatility coming in, volatility over here. We've got volatility on 60 as well. So it just gives you a heads up in terms of what to expect. What am I going to do? Where's the market going next? So it's not just about what the volume price relationship is telling you, it's about what the indicators are telling you as well, and putting it all together. Are we coming down to a support region? Have we got resistance in the way? And one of the key things about, you know, any trading, let's go back onto the indices again for a moment. There we go on that one. When you're looking at any position in the market, what you're looking for is the opportunity. I mean, what you're seeing here is natural attenuation of the volume. You always expect the volume to come in at 2:30, and then it starts to fall away as the market starts to rally, starts to get underway. That's just a natural phenomenon. It happens all the time. It's not necessarily demonstrating the fact that you've got a rising market on falling volume, but it's telling you that the volume is falling away, which is what we expect to see. But don't let that put you off, because you will always see that. You will always see a surge in volume at 2:30, 2:45, whatever, and then the market settles into its rhythm. So you've just got to accept that fact. This is what went on, obviously, early part of the day. These are electronic contracts. If you want my honest opinion, if you're going to trade indices regularly, I would urge you to trade Globex and not trade in the cash markets, certainly not trade in the cash markets for the first 15, 20, 30 minutes. Purely because there is extreme volatility, you'll get shaken to bits. And trading in this phase of price action, I mean, it's demonstrable in its own way, if you like. This price action through here is very straightforward, it's very tradable, it's very consistent, it's not scary, it's not punctuated with volatility. It is just a linear chart which you trade in the normal way. Yes, you've got little pullbacks, little reversals and all the rest of it, but I can assure you this volume is pure, it is absolutely demonstrable. And the price action is much more straightforward, whether you're trading the YM, the NQ, or the ES on Globex alone. It is much more straightforward. So, you know, a lot of people would disagree with me. I'm sorry. I have an opinion about it. I have a pretty strong opinion about it, and I've always held that opinion. Some people will tell you the opposite. They'll say you're nuts to trade Globex on its own. I beg to differ, and I speak from experience. I'm not speaking from some theoretical viewpoint either. You know, not in small contract sizes either. So it's just a point. I'm just watching what's going on at the moment. It's just, you know, when the market's open, you have to sit through this volatility. It's a fact of life. It happens every single day. It's like the London fix. It's like the crossover sessions. You know, they're always there. Sorry, get rid of that. They are always there. They come and go, and you just have to sit through them. It's as simple as that. So it's just hit a pause point at the moment. Let's just go back and see what's happening on GE. Oh, oil, that was the other one. Let's go on to oil very quickly. Let's see what's going on in oil. This is basically the weekly chart, which we highlighted on. We've done a lot of analysis and traded it over the years. If you're not familiar with the chart, I mean, it's a fascinating chart. This was the plunge. This is where we went down to these ridiculously low levels. You know, where was oil going to go from there? Well, there's only one way, and it's gone all the way back up again through the volume point of control and on up to this level here. And the level we're at now is really described by this very strong resistance area on the accumulation distribution indicator, this blue dashed line. That's what we've hit. That's what we were expecting to hit. It's where we're expecting to see congestion, and the market is struggling at the moment. We had a good week last week, but it's struggling this week to break through that region. If it breaks through that region, then that becomes obviously support. In addition to that, you've got the falling away of volume on the volume point of control. And my point that I was going to make earlier on was about when you're looking at trading opportunities, what you're looking at is the chart itself and what is in the way in terms of a barrier to any move higher or lower. It's not about risk and reward. It's about how far you think that price action is going to take you before it's going to run into any problems, either from a volume-based perspective or a price-based perspective. And if you look at something like this, you've got nothing in the way of serious price resistance ahead. Obviously, you'd be looking at the monthly chart in this perspective to see if there's anything on that chart. But certainly in terms of the weekly, what have you got? You've got volume falling away on the volume point of control, which is great because it's going to take less effort to get through there. It falls away quite dramatically up to this level, which is a low volume area up at $75 a barrel. And in addition to that, you've got nothing in the way of price-based resistance. So in terms of the effort down here to push this market through, it's not going to take as much as it is doing at the moment to push through this lot here. And that's, you know, the importance of seeing resistance or support both from a volume perspective and also from a price-based perspective. But that's where oil is at the moment, trading in that particular range. Other than that, chart could be anything. As indeed it is with stocks or future or indices, whatever it is. Let's have a quick look on gold, see what's going on there. Very bearish gold. Been writing about that a lot. That's on the day. Had an update yesterday. The savior for going back to inflation, the savior for gold longer term will be inflation. We've seen a lot of I'm not sure I've got the soft commodities up, but the soft commodities have been rampaging higher, certainly over the last few months. A lot of talk about a commodity super cycle. I think copper's been going up pretty strongly too. Those rises in price are inevitably going to feed through into inflation at some point. They have to, because they are raw materials of food consumption, of cattle rearing, of all sorts of different avenues of food to the table. And therefore it's inevitable at some point inflation will rise.
It's the wrong kind of inflation.
It's the wrong kind of inflation. But when it arrives, then, you know, that will probably be the saving grace for gold. At the moment, it's pretty bearish. I think on the weekly chart, there's a possibility of that going down to around $1,600 an ounce longer term. We're a gold bugs at heart. Of course, we want to see gold rise. I mean, everybody does. It's a precious metal. It's just one of those things that you have an inherent love of, if you like. To put it that way, but that's where we are at the moment in terms of gold. It's not particularly bullish. Had a good day yesterday, but you know, not great at the moment. Let's go have a quick look and see what's going on in indices. Let's go on the multiple ones. There we go. It's come off. Struggling a bit now. Volatility trigger there. Come down to the volume point of control. Come back to the volume point of control. Down the volume point of control. So we're down the volume point of control pretty much across the piece at the moment. Just a question of being patient, waiting. In terms of the dollar's starting to rise quite strongly now. So, you know, it's no great surprise. The yen will be rising as well. Probably buying of the Swiss franc. Let's just have a quick look. See, where are we? Let's pull that over. Yeah, okay. Let's pull that across. Okay, this is what's going on now. Dollar's been into oversold, so this is on 15 minutes. So we're seeing strong buying of the dollar. No great surprise because we got down to the oversold region. Commodities are coming off quite strongly, so you know, selling of risk. And the yen is now starting to kick up, so no great surprise to see New Zealand dollar. You'd see the yen pairs selling off. You'd see the dollar pairs selling off. And Swiss franc in the moment isn't following that particular suit, but probably would if that was going to be a serious reversal in sentiment on the indicators there and in the market in general. Where will you find all the bits and pieces? You'll find them here this is where you'll find all the indicators at quantumtrading.com. We have all the platforms, MT45, NinjaTrader 7.8, TradingView, which I've just been through with you, and also TradeStation has now been launched. We've got 2 versions of that. That's the TradeStation 9.5 with interactive brokers as the live feed, and TradeStation 10, which is TradeStation Securities, and they of course incorporate the awesome power of radar screen, which is wonderful. And remember, when you invest with us, there's several things to remember. First of all, you can move your indicators from platform to platform. So if you start with one platform, you perhaps want to move to another platform, that's perfectly fine. We don't charge you for that. We just transfer your indicators across. We have a lot of customers who start perhaps with MT4 or TradingView, then they want to move to TradeStation or NinjaTrader. Perfectly fine, we do that for you, absolutely no charge at all. And finally, if you do, whether you buy one indicator or several, if you upgrade to another package, for example, we will always give you a credit for those indicators. So you never lose out, you never lose your initial investment. We always protect you in that respect. So you'll always receive a full credit. And finally, of course, if you invest in the full package, even more so with TradeStation at the moment, because it's currently at $677, I think off the top of my head. But once those other indicators are developed for the platform, then we will be increasing the price, which will align with the MT45 platform. So it's a great time to invest with TradingView because, as I say, you'll get all those indicators free of charge. You won't be paying for them. So it's not a bad time to invest in that package. But all the other packages, if you invest with the full package, we also give you all future indicators we develop free of charge. It's just our way of saying thank you. Finally, just to give you a heads up on the education program, I've just touched on one or two aspects of it. Obviously, within the program here, it's called the Complete Forex Trading Program because that's exactly what it is. To say it's comprehensive is a disservice. It is everything you need to know. You have all the modules which cover the psychology, the fundamental analysis, relational analysis, so you'll understand how markets relate to one another in terms of risk, in terms of relationships to bonds, bond yields, how commodities fit into that structure, and of course the actual relationships within markets, you know, how currency pairs relate within the markets themselves. You've got a deep dive into technical analysis, of course, that is VPA. It's all the Wyckofffian principles, it's Wyckoff's three laws. And in addition to that, it's how to apply VPA, not just to straightforward analysis, but we teach you how to understand when a trend is coming to a pause point and to identify whether it's actually a reversal in trend, in other words, from primary to primary, or is it simply a pullback? And if there's one thing that you would learn, it is simply that, because that will stop you getting out of trades too early. It's as simple as that. The mechanics of trading, and then there's something like 200 to 300 hours of video, VPA chart examples, how to use the indicators, pulling it all together, topic webinars with Anna and myself, a huge webinar library, and a resources section as well. And of course, all of that is backed up now. We've added the QTE funded Forex program. And the reason we've done it is very simple, because we wanted to give you, our students, and this is only available to students on the program. I'm sorry, it's not available to anyone else. If you're a student on the program, you have the option to join. It's there to give you the opportunity to leverage your knowledge. And it's very simple in the way it works. It's a no risk deal as far as you're concerned, because you are trading our money. It's as simple as that. We give you the opportunity to start with an evaluation account at $5,000, $10,000, or $15,000. Once you've achieved a very achievable target at that level, you've proved to yourself that you have the consistency to trade, you've proved to us you have the consistency to trade, we then multiply it by 4. So if you start with a $15,000 account, we push you up to 60,000, and thereafter we double it. So you go from 60 to 120 to 240, and in pretty much no time at all, you would be up trading $1 and $2 million accounts. It is simple as that. There is no risk to you. There's a one-off fee to pay. That's it. That's your only expense of getting into that particular program, but it's entirely optional. What we've now bolted together, we feel it gives the complete package, if you like, of giving you the opportunity as a student to benefit from your knowledge and prove to yourself that you can trade a large money account at no risk. So that's it. Hope you've enjoyed this particular video. Lots more to come as always. Thanks for watching. See you again soon, and bye for now.